please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. This is Business Saturday on CNBC TV18. Let's talk business then. US stocks rose to all-time highs on Friday as expectations of a Republican tax bill passing increased. So this is more than the 80th time that these markets have hit record highs. CNBC's Hampton Pearson reports.
U.S. stocks closing at all-time highs to finish the trading week. The Dow adding 143 points, the S&P up 23, the Nasdaq tacking on 80 points. Sources telling CNBC that Campbell Soup is in advanced talks to acquire Snyder's Lance. That deal could value the snack maker, which owns Cape Cod potato chips and Snyder's pretzels, at roughly $50 a share. The two could reach an agreement as soon as next week. Facebook reps defending the company in a blog post saying they want Facebook to be a place for meaningful interactions, which actually improves people's health and happiness. To that end, the social media giant is announcing changes, including for the news feed, prioritizing posts from friends and demoting clickbait headlines, allowing people to snooze or hide, introducing a tool called Take a Break to enable users to hide their IDs, and introducing new suicide prevention tools. And the empire strikes cash again. Disney announcing that Star Wars: The Last Jedi brought in $45 million on its opening night in the U.S. and Canada. It was the second biggest opening night total in box office history, getting beat only by another film in the Star Wars franchise, The Force Awakens. Analysts estimating the film will pull in $95 to $100 million in ticket sales. That's the action from the U.S. markets. Back to you in Mumbai.
Interesting there, $45 million on the opening night for the latest Star Wars film, second only to the previous one. But let's also listen into some expert opinion on the road ahead for the U.S. markets.
You want to talk about the record highs, not only the Dow Jones Industrials, not only the S&P 500. You saw the transportation index make a new high,
Nasdaq
record
now
high
as well.
Nasdaq, Russell 2000.
Right.
So you want to be very careful. We are up at very elevated valuations. Price to earnings, price to book, market price to GDP. That's Buffett's favorite. We're at very lofty levels. So it can still go from here.
How much exactly are companies going to pay after they deal with all of their expenses and deductions? How much of that is going to be brought back on in buybacks? I mean, you could have an explosion, and I think you will, in buybacks. And, you know, what is it going to do to capital spending, mergers? A lot of people in the healthcare space are talking about the mergers that this is going to create. So there's more unknowns even after we know everything. But as I speak to investors and ask on the broad market what they're assuming, right now, companies are paying about 27% tax rate. The assumption when this is all done, it'll be probably something around 20. If you didn't buy back any shares or anything else, that's something like an 8 or 10% increase in S&P profits just from the rate before anybody does anything else.
All right, let's shift focus back home on Dalal Street. The markets yesterday, remember, reacted positively to the Gujarat and Himachal Pradesh exit polls, where the BJP seems to be having an edge. However, it came off the high slightly in the last hour of trade, but still managed to eke out gains of 0.2% over this week itself. Now, all eyes will be on the actual Gujarat election outcome due on Monday morning. So let's listen into how market watchers are expecting the equities to react to all these political developments.
Assuming that the exit polls were correct, and unless there's a huge positive above those kind of polls that we saw, then I think the market pretty much is kind of saying, you know, we're happy with what's happened. I think the good news is, if those figures are correct, is that you know, it's a kind of vote for Prime Minister Modi and his reform process, particularly in Gujarat. Of course, if the polls are wrong, then it would be a huge negative shock for the markets. But I'm working on the basis that the polls are right, but the market's probably priced most of that in now.
All right, let's move on to a CNBC TV18 exclusive now. Sources tell us that the government will be seeking parliamentary nod for the PSB, Public Sector Bank's recap plan next week. Let's go to Sapna Das, who's standing by with more details. Sapna, what are you picking up?
So basically, as we had highlighted yesterday, that sometime in the coming week, the Finance Ministry, IFM, will seek Parliament's nod for the second supplementary demand for grants, out of which, of course, the PSB recap is a major item to watch out for. So basically, what they have to do is that even if the recap bonds are going to be cash neutral, the fact remains that somewhere they have to get it accounted in the government account. So a budgetary space will have to be created for the same. Hence, they're going to seek the Parliament's nod for the first tranche of the recap bonds, and we understand that the quantum may be anywhere in the range of 70,000 crores plus. Now, we had reported this on also, but just a kind of a reiteration, though, of course, top government officials are not really talking on the quantum as such. So that's the first thing. Second, we had also understood that probably some part of the Indradhanush projection that of the next financial year of 10,000 odd crores, government may also seek an additional supplementary for that in terms of the additional net cash outgo, because they already have 10,000 in the current budget in this year, for which no approval is required. But if any additionality is there, and that will be a net cash outgo. So there's a possibility of that as well. So keeping these two aspects in mind, coming back to the recap issue, well, here they're also very clear that this is going to be a formality in terms of seeking the Parliament nod. The amount will be announced in the supplementary, but the contours of the bonds, in the sense who will be the subscribers, what is the tenure of the bonds, what is the coupon rates, whether they'll carry an SLR status or no, all that has yet to be decided probably and yet to be announced. So that announcement will only come later, the actual nitty-gritty. Last but not least, we very clearly, top government officials have indicated that it may be possible that not all PSBs will form, in the first tranche of the issuance of the bonds, not all of them will get the capital infusion, and this is going to be completely performance-linked.
All right, completely performance-linked. That is an important point that you're making out there, Sapna. Thanks a lot for that. Let's move on then. After a delay, the winter session of the Parliament has finally kicked off. The parliamentarians have 14 days to discuss and pass 25 pending legislations and 14 new bills that will be introduced. And the first day has already been lost due to obituaries in the Lok Sabha and the ruckus in the Rajya Sabha. Rajya Sabha saw some stormy scenes after the Congress demanded the Prime Minister's apology. This over his comments on the former Prime Minister Manmohan Singh over a dinner at Manishankar Iyer's residence, which was also attended by some former army generals and diplomats from India and Pakistan, among others. The centre is hoping to push through key economic legislations, but the fate of the Financial Resolution and Deposit Insurance FRDI bill, that is, looks uncertain. The bill has been listed for this session, but the key opposition parties have vowed not to support it.
It's a very dangerous bill, and I think the common man, the Aam Aadmi of this country should not be penalized. I repeat, should not be penalized for the wrongdoings or for the misdeeds and the financial mismanagements of big corporates. And I think it is wrong on part of the government to insist that people bail out the bad companies and the bad businessmen. I will oppose it, and I think I will try to convince my leadership also, the Biju Janata Dal's leader, Shri Naveen Patnaik ji. I would also try to convince him we should oppose it.
There is a strong apprehension that depositors' money will be lost or eaten away by the government, and it is a very genuine apprehension. Somewhere down the line, there is an attempt to tarnish the image of the nationalized public sector banks, which I do not agree. In fact, if banks are passing through some crisis, and it is because of default. So when the bill is really brought for a debate in Rajya Sabha, we will try to amend the bill suitably so that the banks will be protected, the depositors' money will be protected.
All right, let's slip into a short break, come back and we'll focus on something. Get ready to shell out more on your mobile phones, microwaves, TVs as the centre hikes the customs duty. More on that story when we return. Stay with us. Welcome back. You're watching Business Saturday on CNBC TV18. But the other big story on the tax front was smartphones, televisions are set to get expensive. The government has hiked the basic customs duty on some electronic goods. These include mobile phones, televisions, microwaves, as well as LED lamps. This move is expected to give a boost to domestic manufacturers, will affect the manufacturers like Apple that import their inventories for sale in India. So import duty on push-button telephones or mobile phones has been raised to 15% when none was charged before. Meanwhile, import duty on television sets has been raised to 15% from the existing 10%, and those were the existing changes that we had. But there are important flashes coming to you on your screen right now. The GST Council meeting has ended. Remember, this was the 24th GST Council meet, an urgently held GST Council meet. I believe we have Timsi Jaipuria with us as well. Timsi, the two key things which were supposed to be decided in the GST Council meet, the e-way bill as well as matching of the invoices. What do you gather have been the outcome of on these two issues?
Yes, the council took forward only the e-way bill issue. They did not go along with the invoice matching. On the e-way bill, the council has decided that a mandatory compliance of e-way bill for interstate movement of goods has to be done from 1st February. Meanwhile, for interstate movement of goods, a mandatory compliance has to come from 1st June. On the other hand, the council has also approved that on trial basis, both for interstate and interstate compliance, the system will be ready from 15th of January, and some states on their voluntariness, on their own demand, can come back to center, can come back to council informing that they would like to go ahead with both interstate movement and intrastate movement on the through e-way bills only. Now remember, what I'm hearing from sources, which is very important, is the fact that this entire compliance of e-way bill was an outstanding demand by the traders. Traders were saying that they have to take a separate e-way bill in each and every state as they move from one state to the other for the movement of goods. So this was a pending demand, and a uniform e-way bill will be mandatorily compliant from 1st June. So council feels that this will ease out the issues highlighted by the traders, and traders will have a relief soon. Back to you.
All right, Timsi, you're saying that the early rollout of this e-way bill was an outstanding demand of traders, and this will ease out trader concerns. So if you could detail what exactly were the concerns and how does this fix those concerns?
The concerns were very clear that for a movement of goods, if a trader has to send goods from one state to the other and it has to cross 5 states in between, then for each and every different state, it has to obtain a different e-way bill. And everywhere he has to stop at the borders, there was no seamless movement of goods. And this was a major concern that GST was trying to cut down. The entire idea of getting in GST was to have a seamless movement of goods where traders, where truckers do not have to stop at each and every border. And they only on the basis of necessity, only on the basis of enforcement, they were supposed to stop. That too, for the officers to check whether they are actually transporting the goods or not. So only in that concern now they have to obtain only one e-way bill, which they can show in each and every state, and they do not have to apply for a different e-way bill for a different state wherever they cross the border.
All right.
This was a major concern which gets eased out with this movement of e-way bill.
Right, Nimsi. Hang in there. We're also joined by Mr. M.S. Money of Deloitte. Mr. Money, thanks a lot for joining in. We understand that the GST Council meet has ended and they have given the approval as far as this e-way bill is concerned. And a lot of the concerns they say are being addressed. Do you think this is enough? And going forward, what more can be expected?
I would say that the e-way bill at a very fundamental level is something which no one was expecting in GST.
Right.
And therefore, at any given point of time, if e-way bill is going to become a reality, it is going to be difficult for everyone. At a very broad level, it is going to become very difficult for industry. It's going to become even more difficult for the logistics and transportation sector. Because the e-way bill provisions that exist today and the e-way bill notification was issued, it has just not been given effect to till now, till the GST Council approves it. But there are several provisions in the e-way bill which permit a vehicle to be detained, a vehicle to be searched, mandatory documents to be carried, and therefore, ideally, there should be no e-way bill. But assuming e-way bill becomes a reality and assuming we have the government sees no other way of ensuring that the right taxes get paid, then possibly we need to have an e-way bill which is very easy and simple to generate. It need not be through a portal, it can even be through an SMS.
So, do you think there could be any sort of mechanism via which all these things could be done, given the sort of concerns that the trade community has with regards to the e-way bill? Remember, there being a lot of protests to the e-way bill itself, even at the launch of the GST itself.
Yeah, as far as e-way bill is concerned, there are three broad level concerns on e-way bill. The first and foremost is the fact that an e-way bill will lead to vehicles being detained at checkposts, and checkposts will make an appearance all over again, which most of us were expecting would not happen once GST becomes a reality. Because bear in mind, the purpose of GST was to ensure that movement of goods across the country is seamless. So I think we have said ad nauseum that the intention is to make India one common market.
Right.
And if we are making India one common market, why do we need these barriers, across states? And we have been struggling with this for the last 60 years, where vehicles queue up outside each state checkpost. It causes huge amount of bottlenecks, and there are a lot of difficulties for transporters. We have been dealing with them. And that is why it was expected that it would usher in a situation where vehicles would move seamlessly across states. Now, if we are going to go ahead with e-way bill, there are 2 points that I would like to mention. The first is the fact that e-way bill in a modified manner has already made an appearance in some states. So all the southern states, for instance, have some form of an e-way bill even after GST has started. Yesterday, we had an e-way bill which was introduced in the state of UK. UK is Uttarakhand.
Yeah.
So Uttarakhand introduced e-way bill yesterday, and therefore it seems to me that it may be better to have a uniform e-way bill provision across the country rather than have each state decide its e-way provisions. The third point is this is going to become a major setback for the logistics and transportation sector, because the provisions of e-way bill which we have seen mandate that if a vehicle carries 10 consignments belonging to 10 different people,
right,
it will have to carry 10 e-way bills, and it will have to carry a consolidated e-way bill as well. So that is really going to impede movement of goods across state borders, and that is why many of us were hesitant to accept the fact that e-way bill is going to become a reality. But now it seems, based on today's emergency meeting, that we are going to see e-way bill from 1st of February.
World where we can use it as an example?
Okay, at a very broad level, any vehicle that carries goods is required to carry documents indicating the recipient and the supplier of the goods, and this is a common practice worldwide. Now, that objective is normally fulfilled by a document which is called the invoice. The challenge, as I see, in ensuring that the invoice is the only document is the fact that the invoice is something which is uploaded on the GSTN portal possibly at the end of the month. And we have had a lot of delays in uploading invoices because the portal was not ready or the portal had a challenge. So possibly, if this is an interim measure, till such time people start doing a online uploading of the invoice, then maybe at that stage we can do away with the e-way bill. And the requirements of the e-way bill, if you look at the data that is required in an e-way bill, majority of them are already in the invoice. Now, here the issue is at a very simple level. If we are expecting that there will be one more document generated after the GST invoice, which has got all the details are concerned, what purpose is that serving? And would that not become a tool for people to stop trucks and check trucks, which is the state which we had before GST? Now, that is a larger concern that most people are having. And therefore, to my mind, one solution could be to have a very narrow list of products which are subjected to an e-way bill. Have a larger threshold in respect of those products.
Right.
And then exempt everything else. Now, the existing exemption list is very, very narrow. It's agriculture and a few animal products and precious stones and all of those. So increase the exemption list to have most of the products which are typically B2B products, and ensure that the threshold limit is increased so that there is no harassment.
Right. Thanks a lot, Mr. Money, for joining in and giving us this all these details as far as the e-way bill is concerned and voicing your concerns too. With that, we'll wrap up this discussion, slip into a short break and come back, talk about something else. The Karnataka High Court has scrapped the government's rule making pictorial warnings which occupy 85% of the cigarette packs, rules that the Health Ministry has no such powers and terms it unconstitutional. More details after this break.